I hope I didn't go short though. Did I go short? Yeah, there we go. Nice. Nice. Right away. Yeah, that is what an easy trade feels like, You just get filled without even realizing. Okay, so hey guys, welcome to another trade review, and today we're basically gonna talk about the 13th of August trade review and seen the trade, my trading journal here. And yeah, basically today is a profitable day, and yeah, let's just get on with it. Yeah, today's Wednesday, we did a news and we just passed CPI, so it's pretty okay. And yeah, so it was a profitable trade. So we trade back to the C on the opening range gap. Okay guys, I got a feeling this one is gonna be a quick one. So daily chart is in, and what we can see here, we can see that we are at an all-time high. So yeah, when it's all-time high, what you do? ICT said before, when we are at all-time high, we don't try to catch the lows. Okay, so this is the first thing. The first thing that we should pop out in our head when we see market in all-time high is we are not going to catch the low. Okay, so that's the first thing to take note. And but second thing that I want to take into account is the first 30 minutes, the new opening range gap will be filled as well. So let's just continue moving and see. Okay, so very good. I say all-time high, don't pick tops. Okay, so basically I did measure here to here for the boom measurement up. Okay, so yeah, I got something to see. I got something to say here on the 5-minute chart. So on the 5-minute chart, let's go back a bit. Okay, so this is the 15-minute chart. What we can see is this. Look at this 15-minute BC here. We traded into it. Then if we have another market structure shift here, fair value gap traded into and continue higher. So currently it's looking like really bad, really bullish. Okay, so looks really bullish, and this is the 15-minute chart. Okay, so right now we jump down to the 5-minute chart. Okay, yeah, so apparently during my work time I did traded it also, but never mind. What we can see here, will I pull it out? Okay, so I draw the quadrant of the 15-minute BC here, and you can see we didn't even reach for the upper quadrant of it. That is a sign of bullishness. So I won't go more down to see the 5-minute chart. Yeah, it looks like you cannot go down and see 5-minute chart, so I'll just do it here. Okay, so this is the 15-minute chart. I draw a BC here, and a BC here, and a BC, and another fair value gap here. Okay, so we go down to 5 minutes. So at the moment look very bullish. Okay, we go down to 5 minutes and see. Look here also bullish. So bullish fair value gap has been supporting price. Okay, and that's basically it. How I can see is that price came into this 15-minute BC right here. Then we had a displacement. We have a fair value gap forming the 5-minute fair value gap right here. Okay, so here we got a 5-minute BC, which is being traded into, but it formed the 15-minute BC. So what did I say about this fair value gap? I've always said if high time frame forms a fair value gap, but on low time frame that fair value gap is being filled. That means what? That means we are not likely to retrace into that fair value gap. Okay, so that's basically it. Fair value gap, and here is basically the order block, and this is the previous day high, and then we went up. Okay, then basically what we have here is the new opening range gap, and like I always say, close and the open, we measure it, and here we have the new opening range gap, and we always have CE of it reach 70% chance, and we haven't finished. We're getting close to a 950 macro time then price. Okay, so Dow is pulling high. Yeah, no symmetry, that's why I say stay sidelines first. Yeah, I'm saying myself not gonna chase, and there we go. We have a displacement. 5 minute the BC wasn't respected. I like it. I like what I'm seeing. And right now, when price taps into it, there we go. I'm gonna go short in there. I hope I did go short though. Did I go short? Yeah, there we go. Nice. Nice. So I went short, and basically here is the high of the new opening range gap. Here is the C of new opening range gap which I was aiming here. So 6478 is my target level. 6498 to 6478, that's like 20 points, guys. So I got 20 points. Even upper quadrant here is fine. Yeah, here we got the sell side. So upper quadrant is 6483, also fine, and also fine. Today is gonna, wow, beautiful trade. Because first we had that displacement in that 5 minute BC, which was just violated right away. That's why we like all this kind of reaction. That's telling me that okay, I'm bullish. Time to go lower, baby. Yep. So basically, I'm feeling very confident with this trade right here. And then we got another 15 minute BC. I want to see how price step through. I don't want to see it. I don't want to see come here and just like that. No, I want to see it step through. Okay, right now I'm seeing this as an order block. So these two is consecutive order block. So these two both are order block. And next thing that I'm seeing is also this inversion fair value gap, because it's in the discount portion of the 5 minute BC, so we want to use it as see as resistance. Okay, so here Nasdaq form a CB, so we are in symmetry, but dollars are going lower. So we form another fair value gap. Got filled there. Okay, so we got filled right away. $27.5. That's the profit. And yeah. So basically right now I would shift my stop loss to here. Yeah, because right now I'm seeing this high as intermediate swing high, or even just put it above, put it here. I will trade my stop loss here, and let's continue watching it. Yeah, very nice. So I trade the stop loss at the same place. So basically, why did I trade the stop loss so early? First is because I was feeling uncomfortable. Yeah, but yeah, then we enter back at the demo account, and let's just see how it goes. Okay, very nice. Right now, what I want to see is I want to see this swing low stay intact to go lower. Sorry, swing high stay intact. Okay, anyway, this is the first presented fair gap. We traded back into first presented fair value gap. Okay, so now we form a swing high. Stop loss placed right above the swing high, above the first presented fair value gap. There we go. There we go. Then let's see, we have displacement. And here what I measure is the Fulcrum point. From here to here, measure this to get lower point. And here the first -1 level, which is the 15-minute BC as well as the sell side level. So very low context here. Yep, stop loss history again. Dollar is going lower, so not that good. But Nasdaq is also going lower, has a value gap there. Okay, there we go. So it's 10-10, 10-19. There we go, engineered sell side again. Yeah, but right now, risk free, break even, dollars pulling lower, that's what make me be careful. Okay, then series start spiking a lot. Yeah, so first sell side reached with the 15-minute BC, so this is basically the lowest hanging fruit objective. Okay, see, right now sell side is being engineered here. So let's see, do you want to create down? Nice displacement. I'm seeing all this as order block right now. There we go. Right now what I will also do is measure here to here to see how low it can go. But basically that is it. From here to here. Voila. 20 points, guys. So yeah, that's it for today's trade review. Okay, hey guys, welcome to another trading review. Yeah, today, as usual, in profits. And yes, okay, so let's talk about today's trading a bit. So at first we were at all-time high, so I wasn't trying to catch any high, wasn't trying to pick any tops. But for the first 9:30 and 10 o'clock, usually price will reach back into the CE of the new opening range gap. So what gave me the green light to enter this trade is that the fact that Nasdaq wasn't as firm to the upside as Dow and S&P. So Nasdaq was already showing a lot of signs that it want to go lower. So basically, we have that displacement below the 5-minute BC, which I expected to act as inversion, because we start forming a swing high and stuff. So, and dollar was also in symmetry, so that's what gave me the lot of green light. And the most important thing is the risk allowed me to enter that trade. So I entered that trade, and you can see actually my stop loss here up and down. Should I take more? Should I take less? Should I just take 5 handles? But in the end, I just tell myself take at the lowest hanging fruit and just be contented with it, because I was feeling really uncomfortable as well. So why is that? Because the purpose of me trading right now, like the moment, is just to recover from my drawdown. And I've been watching ICT and series as well. I want to start it, okay? I think I'll start it. But right now, my criteria of starting the N series, that means I will start increasing my trade risk. That means I will increase it to just 1%. Like I'll follow the rules of the N series, but I will want to recover my drawdown at the moment with the one contract first. That means because right now the drawdown that I have is based on the one contract that I've been trading. Okay, so if right now I switch to the 1%, like the N series ICT give that rules, basically trading with 1% to make 4% a month. It wouldn't, you know, I could have easily covered the loss with 2 trades already. But right now the drawdown that I made is based on the current trading rules, the current trading model that I'm doing. That means one contract, always $5, $5. So I've been looking back on my past July. So July had me going back into the drawdown. Why is that? Because I increased my trade frequency, especially after I lose a trade. So yes, I can see that like in July, there's a couple of days I take 4 trades a day. And even though each trade doesn't exceed $25, but the frequency was there,
and it just adds up. So basically that's it. So I just took profit at like, alright, I told myself, okay, 21 ticks or 22 ticks, I think. Yeah, 22 ticks. Because I'm gonna do it the way now. My TP profit target should be at like 21 ticks to cover the commission cost as well. Anyway, so today everything was clean. Market was in symmetry, and with Nasdaq firm to the downside. So bam, prices reached beautifully, and you can see I set the whole thing. I set through the whole session because the target, the draw on liquidity was the CE of the new opening range gap, the midpoint of the new opening range gap. And from the first AM fair, when you get to it, wow, damn, offer like 20 points. And I just do my hypothetical stop loss, just studying, just gaining insights, gaining experience, and you can see, wow, it reached there beautifully. The sell side was just too clean and bam, ripped it apart. So yeah, and that's it, man. So yeah, that's it for today. So you see the problem here, every time I have a winning trade, I trade stop. But when I have a losing trade, I end up trading more and more and more. So right now, the rules I'm going to add is, if I have a losing trade, I'm going to maximum give myself 2 chances. And the second trade, I have to risk less than how much? Less than half of what I lost in the first one. Then only I will, yeah, so that's basically it. That means the second trade, I'm going to risk less than half of what I lost in the first trade. So right now, these are the rules that ICT set before. So yeah, we shall see how it goes. And I'm going to allow myself only 2 trades, okay? You can see when I win 1 trade, I'm contented a little bit. But when I lose, oh, I started, my frequency of trade keep on adding. So that's what happened in July. And also we shall see what we will do in August here. And yeah, remember August was a pretty muddy month. So not going to push so much as well. And because right now I'm also doing my work time, my break time, I'm also trading the London session, and it's on the demo account, doing pretty well as well. So let's go, Ian. You won't give up, and I know you will make it. Okay, so that's it. See you guys in another trading video.